I've never had a scenario where a buyer says to me, I've got a 778 credit score. I just checked Credit Karma today, and we've pulled credit and it's the same exact score. Never. And I've been doing this 20 plus years at this point. Credit is to me the one thing that I feel like it's never been a perfect algorithm, right? That you could pull. I've seen credit reports where the buyer's got a 790 on Equifax and a 630 on Experian, and I don't see any difference in the profile. Doesn't make any sense, right? So, I would say the most important thing is your credit is so important, right? Because if you can make as much money, you can qualify based on income, you can have plenty of assets. If you don't have a qualifying credit score, hard and fast, you can't qualify. Yeah. Right. If you got a 550 credit score and you want to buy $1 million home and you're not going FHA, which you could go FHA theoretically, but if you weren't, right, even if you made $500,000 and you qualified and you had the assets, if you don't have a qualifying credit score, you can't qualify.
So that's one of the primary things that a lender's looking at when they're considering.
Oh, when you really simplify it, it's credit, income, assets. That's it. How's your credit? What does your income look like? What kind of debt ratio? And do we have verifiable assets?
Got it. So to your point, liabilities are considered in that, right? So income
Correct.
versus liabilities. So you mentioned debt to income before, and my understanding is there's a front end and a back end ratio.
Yes.
We were talking about this a little bit. Can you elaborate on what that means and how you think about that?
Sure. So front ratio is very simple. It's your housing payment, right? So it's your principal, interest, taxes, insurance, PMI, and association dues. So if your mortgage payment is $3,500 with everything, and you're on a gross salary of $120,000 a year, so 120 divided by 12, $10,000 a month. Your mortgage payment's $3,500. Your front ratio, your housing ratio, is 35%.
Okay, got it. And what are some of the standards that for a conventional loan, or you mentioned earlier, right?
So believe it or not, FHA will allow 46.99.
Okay.
So what that means is if you are a salaried employee and your gross income is $10,000 a month, hypothetically, you can go up to $4,699 in terms of mortgage payment. Now, I personally think that's crazy, just because it's a high payment.
Sure.
Right, and we're using gross.
Yeah, that's a good for everyone to know. Your gross income.
Gross income.
Right? So that's not actually the income that's in your pocket.
Correct.
Yeah.
Correct. So now what ends up happening is most of the time, buyers will qualify for more than what they're comfortable paying. So that we will do a consultation. We always do a buyer consultation after underwriting reviews it. In our buyer consultation, we go over price range, down payment requirement, taxes, insurance, interest rate, really all the details so they know exactly what this looks like on paper prior to going out to look for a house, right? And a lot of times, more times than not, we'll say, here's your price range, here's your proposed monthly payment. Now, we have to estimate taxes and insurance, of course. And they'll say, wow, I qualify for $4,500 a month. Yes. I want to be no more than $3,000. So a lot of times they'll qualify for more than what they're really comfortable paying.
Yes, exactly.
Which is good.
Yeah. Yeah, so that's what I tell a lot of our buyers. You're going to get qualified for X, but you need to make a decision on what you're comfortable with purchasing, right?
Yep.
So
now, don't get me wrong. We've had scenarios where it's like, hey, you qualify for $3,500 a month. Well, I want to qualify for $5,000 a month. Well, we can't get you there.
Yeah. Some people push the limit, right?
Oh, they push.
Yeah,
they do.
Totally. I mean, we've done a handful of the deals where we just squeak it out, right?
Yep.
We get it right. We're tweaking the very last things, talking to the insurance broker. How can we get it an extra $200 less? Right? All these different things.
Bare bones insurance policy.
Yeah. We'll work it for you. That's for sure. If that's what you want to do, it's just it's your decision. Yep. So that's the front end ratio. Again, front ratio is the cost of the home compared to your gross income, right?
Correct.
Okay,
Yep.
So that makes sense. And then what is the back ratio? How does that?
So back ratio, you take the housing payment, right? We'll go back. We'll use $3,500 as an example, plus all liabilities, credit card payment, minimum payments, credit card minimum payments, student loans, car payments. And then you total that up and you divide that by the gross monthly income. So let's say your other liabilities are $2,000, right? So now you've got 35 and 2 is 55 divided by 10 is a back ratio of 55%. FHA will allow up to 56.99.
Okay. What about conventional?
50.
50. Okay. All right. So they're in violation on conventional in that case and accepted on FHA. So
now remember, VA may go to 70 in some cases. I've seen 74s, 68s.
Wow.
Yeah.
Wow. So this is all the other stuff that we need to take into consideration in order to approve you for a loan, right? I mean,
Correct.
You can't really tell somebody what they can buy without really understanding their income and their liabilities.